Good evening, everybody. Hope you had a great weekend. We will be covering the markets ending March 10th, which was this past Friday. To start off, we'll go over old crop soybeans, which is a May 23 contract. We did start the week higher last week. We got up to the 1530 area. However, we did see some weakness from outside markets, mainly maybe a likelihood of interest rates rising some more. That really pressured energies and equities and commodities down this past week. So the early strength in soybeans from last week really ended up in a neutral area again here from our 1540 resistance level down to our 1470s support levels again. Technicals are still very neutralized in this area. Long-term momentum is slowing down, but continue to be very neutral on this May contract. Again, support is here in the high 1470s. Resistance is up in the high 1540s. So if we get up there, obviously it may be a good time to liquidate some grain if you still have some old crop beans. Moving on to new soybeans, we did test this lower channel from the uptrend from the late January lows, which we had another higher low at 1345, and then on Friday we tested here about the 1350 area and bounced into the close. So we still are fairly neutral in our shorter term trend, and then obviously between our longer term we have our high resistance at 1427, our big support at 1330, and then in between here we're just kind of playing ping pong. So if we break one of these trend lines here, that may turn the ability to turn up higher here, or if we fail at this upward trend line, we may head back down to 1330 support. Again, fairly neutral on these strength indicators, a little bit weaker than neutral, but money flows are also coming back down, and long-term momentum, we did come off higher here from our late January lows, came to a neutral position and hoping to stay there and gain some strength off of that. Moving on to old crop corn, that we're tracking the May 23 contract. Again, we broke our longer term bull flag. We bounced off of support here at the beginning of March. We rallied into the next week, and then obviously the past several days we sold, and we really broke through some key resistance here at about the 620 area. We did find a bottom on Friday at 605, and we actually bounced into the close, almost got back within this lower channel of the bull flag. To get any strength or new strength started here, we'd really like to get up and close above that 636 level, and definitely if we're going to plan on getting back up to the 660 area, really need to have a daily close over that 648 level here. Until then, things remain very weak. We're extremely oversold, but honestly, we really need some bullish news to get prices back up into this bull flag and get any traction moving higher. Moving on to new crop, and this is the final chart we'll track. Obviously, from our long-term bull flag from last fall during harvest, we continued to move in a downward stretch, and we broke below our bull flag last week. And then we are now bottoming out here around the 1550 area. We're close to chart support from that 1547 down to 1543 area from our last summer lows. I'm tending to think that we probably will try to test those and hopefully build a long-term support level in that 1540 area. But again, to get any traction and strength and price going here, we really need to get back within this bull flag, and then also to really have a daily close over that 582 level. Strength indicators are extremely overweak yet, and we're very oversold. So again, really looking forward to seeing if we could get some bullish news at any point here. It's not the time to be selling new crop grain when things are this oversold. We really need a rally based on some type of planting delay concerns or other things coming out of South America to drive price back up into this range and see if we can get over that 582 hump to really consider making some new crop sales in around that $5.90 to $6 area. Hope you guys have a great week. Call us with any questions, and thank you for watching.